Good morning and welcome to Beyond the SEAF Model. This is John Kosar sitting in for Jack this week, and these data are through the end of last week. They're actually through July the 3rd of 2025. So let's get started. Let's begin by moving down and taking a look at the SEAF graphic to see where we are this week. Technology is again number one. It's been number one for 9 of the past 11 weeks. It's very unusual for it to be number one for that long, but let's just back out of here a second and see what that has given us. We can see current SEAF model signals and related performance. So this is the SEAF model via the Research Center. And we can see that since 428, technology sector spider XLK has risen by 23.4% outright, while outperforming the S&P 500 by 8.6%. This is really the gist of how SEAF works, and what the purpose is of SEAF is to find where the money is going, because although there are other inputs to the prices of these sector spiders going up or down, one of the big inputs, one of the most influential ones, is the actual money that is moving in and out of those ETFs. So this is why we do this. And let's go back to the SEAF graphic right here, and let's look at the others. This week we lost XLC and XLI. You can see XLC Communication Services, it dropped down to number 5, and XLI dropped down to number 4. Replacing them is XLY and XLB. So we've got a total score here of 5 for technology, 3 on the trading, which is 1 week, 5 trading days, 1 for tactical, which is 21 trading days, it's 1 business month, and number 1 strategic, which is 63 trading days or 1 business quarter. And we go up to 9 for XLY, consumer discretionary, and XLB, of course, is number 3 with a SEAF ranking score of 12. Down on the other end of the spectrum, look what's at the bottom here. We have consumer staples, which is XLP, and XLV, which is healthcare. Both of those are defensive sectors. So when I look at this, the first thing that I see is that these the SEAF model is positively aligned for a risk-on environment, right? You've got the faster horses up on top. You have the more speculative, the more alpha-generating XLK and XLY up top, and you've got the defense down at the bottom. Let's move over and take a look at the heat map. I'm going to change views here. So here's the heat map. This basically gives a little bit of color to, it shows a gradient, kind of a measure of just how negative or how positive these asset flows are. So here we have technology, obviously strong green all the way across the top. A couple that kind of pop out to me is here's financials. This is number 1 this week on the trading time frame. So in the very fast time frame, it's number 1, but we're very weak in the back end. So I'm going to be watching this one closely. I don't know if this was just a flash in the pan that we had a strong week in financials. We had a lot of money going into financials last week, or if this might be the start of a more sustainable trend. So right now it's kind of an oddity. It's kind of interesting to us, and we're watching it. You see this on the other side of the spectrum here, up here with XLC. It's 10 on the trading category, again, which is 1 business week. It's the second weakest sector in terms of the trading time frame, but look how strong it is here on the back end in tactical and strategic. So this is kind of an inverse of what we saw with financials. We're going to be looking at this over the next couple of weeks and seeing if XLC just had a bad week or for changing a trend here. But again, the general message of the SEAF model is that the money is going into the faster horses and it's coming out of the defensive places. Next, let's take a look at a couple of these charts. Let's begin with XLK. And what we see here is we call these the rainbow charts for obvious reasons. If it's green, it's favored. Favored is 0 to 15. If it's neutral, it's going to be yellow. And if it's a void, it's going to be red. So what we notice, just kind of taking a cursory look, when we get up to green, when we get up to favored and stay there like we did here around Thanksgiving time of last year and stay there, we usually get some relative outperformance. This chart on the bottom is the relative performance of XLK versus SPY. When we move down to the avoid space and stay there like we did here from basically February to, let's call it, the middle of April, we got a strong trend of relative underperformance by XLK. So what we have now since April the 24th, we've gotten into favored status and we've stayed there. We've had a couple of moves back down to the lower boundary of this, end of May, June the 11th, and July the 2nd, but we stayed in favored territory, which gave us this 12% trend of relative outperformance by XLK. The next one we're going to look at is XLY, consumer discretionary. And you can see that it's been kind of nibbling in the favored status since middle of May. Hasn't really been able to hold it. So its latest foray up here was as of June the 18th. Note that we had an extended period where XLY stayed in favored territory. Let's call this between the middle of October and the end of the year. And look at all this nice relative outperformance that coincided with that. That's that phenomena where if there is money rushing into one of these sectors, it indicates interest, obviously, but it indicates conviction to buy these ETFs and hold them overnight, take the overnight risk, so they don't have to pay higher for them the next day. That's the mindset. So it's way too soon to see if we're getting into another situation like this. But here's what we're watching. There's a relative underperformance low here on March the 18th. We've managed to stay above that since then. It's kind of a support level on a relative performance chart. So the longer that we could stay up in favored status up here on the top of the chart, the more likely that this relative performance support is going to hold, and we're going to turn that trend higher. The third one is material sector, XLB. You can see that it just moved into favored status as of July the 1st, and it's already the best SEAF ranking that it's had going back the full year that this chart shows. I actually checked back, and the last time that the material sector was in the top 3 in terms of the SEAF ranking, it was October of 2023, so almost 2 years ago. So again, this is a very early part of this move. We don't know what's going to happen, but it is pretty unusual to see this kind of strength. Again, this is the strongest, this is the best SEAF ranking that XLB has had in about a year. The next thing we're going to do here is we're going to look at some charts. I want to see what these look like on the charts. So let's go over here to XL. Let's start with XLK since that's our number one. So these are our own charts. We have a lot of lines drawn in them. They're a little bit messy, but they work for us. So this is XLK daily. Down here is XLK versus SPY. Down here is the relative performance chart with the light blue line. So what we see here is as of 6/24, June 24th, we actually broke out of this pretty important resistance level here that was based on the highs that we made back at the beginning of the year, and we're making new all-time highs. And just as important to me is we are making all new relative outperformance highs. So this chart really is exactly what I would expect when you have a situation where 9 of the past 11 weeks, it's been the number one ranked sector according to the SEAF model. Let's go to our next one, which is XLY. That is number 2 this week. And we can see that it's starting to break through this level that dates all the way back here to November of 2021. We already broke it once up here back at the end of the year, beginning of this year, and we're starting to make fresh highs here. We still haven't seen anything encouraging in terms of the relative performance chart, but again, this is a brand new entry to the top 3. So we're breaking some resistance. The thing to watch here is notice that the 200-day moving average in orange and the 50-day moving average here in blue are both converging at, let's call it 211. So above 211 in XLY, it looks healthy on an outright basis. Next one we're going to look at is XLB. I like to look at these kind of like we're doing now. I let the money flows tell me where I should be paying attention, and then I go to the individual charts for context. So what we have on XLB is we have broken the 200-day moving average, which is this orange line here, just over the past few days for the first time since December of last year. That's good. That's a positive sign. And it hasn't broken it by a lot, but it is suggesting to us that we have a major bullish trend change that's kind of in progress, let's call it. What I don't like yet is we are not outperforming the S&P. The XLB is still on an underperformance trend versus SPY because it's underneath the 63-day line here, 63-day moving average line that is a gold color or a yellow color. I want to see relative outperformance here to get that going. But again, XLB has been in the top 3 for 1 day, 2 days. And it has been a weak sector for the past 2 years. So this is what they look like on the chart. The next thing I'd like to do here is let's go to the rainbow charts. If you're not using these, there's a lot of information here. It gives you a lot of context for trend. So we've already spoken about the actual graphic and where everything kind of sits right now. Heat map we've looked at. This is something I want to pay attention to. This is, let's make it a little big. This is a little bit bigger. There we go. So this is if you take the AUM of the 11 sector spiders and you add them together, which if you add the 11 sector spiders together, that's the S&P 500. So we like to look at all of their AUMs together just to get a general idea as if there's money going into the S&P 500 or going out of it as indicated by the sector spiders. And what you can see is that when these assets drop below their 21-day moving average, which is Asbury's tactical time period right here, basically the end of February, and it stayed there until the middle of April, we had a decline in SPY of 10.66% right here. And then we turned higher, again, April 24th, April 25th. I know the CPM has been risk on since April the 24th. A lot of this happened right around the 24th of April. But look what's happened since then. 16.48% move higher in SPY, while we have stayed above the 21-day moving average. We had a couple of tests of it, but those tests held. So this is telling us that the driving force, or at least the major driving force in the stock market going higher throughout this time period is those asset flows, which are like fuel. It's fuel for an automobile. It keeps it going down the road, and that's what we're looking at here. Let's kind of page through these. Financials. You can see financials fell out of favored territory middle of May, and look at the relative outperformance by XLF since then. Until we get back into favored, here's the opposite. We got into favored here in January, favored status, and we stayed there until, let's call it the middle part of March. That gave us all of this relative performance. So I love these charts because they not only tell me if I've got a buy signal or not, or a SEAF signal rather, an overweight signal, but they also give me some context. Energy. You can see It's had sporadic, quick moves into favored status for the past year. Hasn't been able to hold. Those of you that are trading the SEAF model, you probably realized that or probably felt it. XLE was top 3 a couple of weeks ago. Look how quickly it fell out of favored status. And during all this period, we have a general trend of relative underperformance versus SPY. Technology we already talked about. This is utilities. Utilities had a nice run early in the year. SEAF was actually overweight utilities for most of the first 3 or 4 months of the year. It gave us all this relative outperformance. I believe it was 14% of relative outperformance that we caught because utilities moved into favored status according to SEAF and stayed there. Right now, it's been banging around in this, this neutral area for the most part for the past couple of months, and it's been accompanied by relative underperformance versus SPY. Industrials, we're starting to move into favored status. Haven't been there really long enough to affect the trend, but that's another one that we've kind of have our eye on. It fell out of the top 3 a week ago, but it's still in favored status, so we still have our eye on that one. Staples. It fell out of favored status roughly, let's call it June 15th, and has progressively worked its way into avoid status. Look at the relative underperformance here. These charts are very, very influential in telling us where the money is going, and most of the time, 90% of the time, anecdotally, where the money is going is where price is going. If the money is going into a given sector, it's going to drive that price higher. Consumer discretionary, we just talked about. It's number 2 this week. Hasn't really been here long enough to do anything to the trend, but you can see it's been flirting with favored status here really since middle to latter part of May. Healthcare, buried in a void since latter part of April. And look at this relative underperformance. When you see it here again, October of last year through Christmas of last year, steady time spent in the avoid part of this chart and just aggressively underperformed SPY. Here's materials, brand new. Again, we talked about materials spiked into favored, but this has been a sector that has not done well for the past couple of years. The proof's going to be in the pudding. I'd love to be able to get on board a new trend early and ride this for a while, but all we're doing is following the money. We're not making forecasts. All we want to do is follow the money here. Here's real estate. Note that very, very limited time in the lower part of favored status, mostly in neutral, and it's been kind of sideways to lower versus the S&P. Here's XLC. Communication services, we're still in favored. We fell out of the top 3. We're still in favored. And since then, we've been maybe a slight outperformers here. But this is still in the game as far as we're concerned because it still retained its favored status even though it fell out of the top 3. So there we go. A little different than what you're used to getting from Jack. Actually, I think he does a better job of this than I do. But he will be back next week. And have a great week. And we'll see you here 1 week from now as we break down the SEAF model and sector flows with you once again. Thanks.